Diversified conglomerate Sime Darby is divesting Weifang Port companies in China for about 1.27 billion ringgit, marking its full exit from the non-core ports business. In a filing with the local Bursa today, Sime Darby said its subsidiary Sime Darby Overseas Hong Kong has entered into share sale agreements with SPG Weifang Port Group Co. for the divestment. The filing said, in addition to the disposal consideration, Sime Darby Overseas Hong Kong will also receive an indicative sum of about 357 million ringgit as repayment of shareholder loans. The proceeds will be utilised for future investments in the group's core industrial and motors businesses, capital expenditure and/or to repay short-term borrowings. The deal is expected to be completed by the fourth quarter of 2022. Sime Darby Group CEO Datuk Jeffrey Salim Davidson said these past few years have been a challenge for the port's business and noted that China remains one of its most important markets, contributing almost 40% of revenue for the conglomerate. He highlighted that Sime Darby's industrial and motors businesses there span across 120 locations and 14 provinces. Shares of Sime Darby ended trading up 0.46% at 2.17 ringgit, giving it a market capitalization of 14.78 billion ringgit. Bank Negara Malaysia will raise rates by 25 basis points during its meeting later this week, a Reuters poll found. A Reuters report noted this would be the central bank's first consecutive rise in more than a decade, pointing out that Bank Negara, although dealing with low inflation compared with many other economies, unexpectedly raised its key overnight policy rates by 25 basis points to 2% at its May meeting. All 22 economists in its June 27th to July 1st poll forecast rates to rise by another 25 basis points to 2.25% on Wednesday. 12 of 22 predicted another 25 basis point rise in September to 2.5%, while 10 expected no change after a July hike. The report highlighted that Bank Negara last raised rates twice in a row in mid-2010, though it is expected to go slow compared with other global peers. Quoting Derek Kum, Asia economist at Morgan Stanley, the report said the central bank will be mindful of potential upside pressure to inflation, stemming from recent increases in minimum wages, upward adjustments in price ceilings for certain food products, and a pickup in demand pull inflation on the back of economic reopening. Inflation rose to 2.8% in May from 2.3% in April, while the ringgit has weakened nearly 6% so far this year, raising the prospect of imported inflation pressure. Malaysia's import volume grew 0.7% in May from a month earlier, led by food purchases from other countries. The Department of Statistics Malaysia said in a statement that the increase in import volume was due mainly to increases in the indices of foods, up 9.5%, machinery and transport equipment, up 6.3%, and miscellaneous manufactured articles, up 4%. Meanwhile, the prices of Malaysia's imports, as measured by the Import Unit Value Index, grew 2.9% from a month earlier. This was due to increases in the indices of animal and vegetable oils and fats, up 11.7%, mineral fuels, up 11%, and machinery and transport equipment, up 1.9%. On a year-on-year basis, the Import Unit Value and Volume indices rose 12.9% and 21.7% respectively. As for exports, the volume in May was down 9.1% from the previous month, contributed by decreases in the indices of manufactured goods, down 11.8%, miscellaneous manufactured articles, down 14.2%, and machinery and transport equipment, down 6.8%. The Export Unit Value Index grew 3.9% on the back of more expensive mineral fuels, up 9.6%, animal and vegetable oils and fats, up 6%, and machinery and transport equipment, up 2.4%. Year-on-year, May export units value and volume indices were up by 22.2% and 6.9% respectively. Prime Minister Datuk Sri Ismail Sabri Yaakob has launched Malaysia Digital, a new national strategic initiative aimed at putting Malaysia at the forefront of the digital economy. A successor to MSC Malaysia, this blueprint is spearheaded by the Communications and Multimedia Ministry through the Malaysia Digital Economy Corporation or MDEC. The initiative's implementation will be coordinated by the Ministry's Malaysia Digital Coordination Committee. Ismail Sabri said MSC Malaysia has served to transform Malaysia into a knowledge-based economy since 1996, and now Malaysia Digital will seek to enhance the country's digital capabilities and boost the existing digital economy. This will be realised by the introduction of two initial Malaysia Digital Catalytic programs by MDEC. The Rantau, which is aimed at transforming Malaysia into a preferred digital nomad hub, and Digital Trade, which will seek greater harmonisation of standards and regulatory approaches, as well as to facilitate trade within and across borders. Last year, Malaysia's digital economy accounted for 22.6% of gross domestic product and is expected to grow beyond the initial target of 25.5% by 2025. Bursa Malaysia's small cap index fell below 14,000 points for the first time in about 20 months, after the gauge dropped more than 1% amid broader market weakness. This as the prospect of interest rate hikes globally to fight inflation triggered concerns about slower economic growth. The small cap gauge, which opened at 14,180.73, fell as much as 1.4% to a low of 13,978.04, before paring losses to settle at 14,019.45, still down 157.81 points or 1.12% from Friday's close of 14,177.26. The last time the small cap index fell below 14,000 was on November 11, 2020, when it ended at 13,950.24 points. Meanwhile, the benchmark FBM KLCI dipped 12.22 points or 0.84% to end the day at 1,437.52. Hong Leong Investment Bank research analyst Ng Jun Sheng said that the KLCI should stay choppy this month due to a lack of conviction among investors, underpinned by a 24% slide in trading value from May's 2.39 billion ringgit to June's 1.81 billion ringgit. However, Ng said the KLCI's battered valuation of 13.8 times calendar year 23 PE has reflected a reasonable degree of the negatives and provides a good opportunity to nibble after plunging 171 points from its year-to-date high of 1,620. The research house's third quarter top picks are a combination of interest rate upcycle, RHB Bank, Affin Bank, commodity plays, Press Metal Aluminium Holdings, Kuala Lumpur Kepong Dagang Exchange, economic reopening, Sunway Evergreen Fiberboard, Focus Point Holdings, and value or sold down stocks, Tenaga Nasional, Dialog Group, Bumi Armada, Kobe Technology.